Moving ahead to our next session, I now invite Mr. Amit Chaudhary, Head of DeFi Research Polygon, and the moderator of the event, Mr. Vinayak Godse, Senior Vice President, DSCI. Over to you, Vinayak.
Thank you. Thank you, Saurabh. Welcome, Amit, for this another interesting session of a Metaverse Symposium. The first time we are hosting this symposium. So, Amit, you lead the Polygon's DeFi research team, and we all know about Polygon. Many of the people in India, some of them have been knowing, but because of the recent news of investment, significant investment, I think most of us now started knowing about Polygon and the work that Polygon has been doing this really. So, I mean, we can start with a little bit about what you do, how you enter in this field, and then probably talk about the DeFi and some of the elements and concepts that shapes the concept of DeFi.
Yeah, sure. Thank you. Thank you for inviting me to this chat. I'm very happy that you have invited me. About my background, like how I got into this, and it's very non-traditional as the crypto world is. So I have a PhD in economics and focused on traditional finance to begin with, but when after few of my months in the PhD, I started looking into the inefficiencies of finance, the traditional finance. And then, while me and couple of researchers at my university was thinking deep about it, and there was a small part of decentralized finance getting built on the blockchain. We got interested, and I got interested, and then I dwelled into this. Um, I had a background in traditional finance in big banks, so I have seen them closely. And being a technical background, so from myself, like I have somehow built this story in my research and my mind that if these three things combine, like the ideas of traditional finance and technical background and the technical expertise and the vision of making things much more simpler, then things can be a lot better, and you can see all those things in a decentralized finance world. To say the decentralized finance in a very naive world, we can say like it's primarily all the financial services getting built on a blockchain. And when I say getting built on a blockchain, whenever we in our normal lives, whenever we handle money, whenever we handle any financial thing, small company, big company, we always have an intermediator. We always have someone. We have a bank. It's not bad to have an intermediator, but the things are sometimes very costly. Things are sometimes very inefficient. So DeFi solves all of these things. uh, I hope this was a very we can dig
Yeah,
deeper, you know.
yeah, but let's look at a conceptual, and then we'll come to technology, right? So most of the banking systems are centralized because there is somebody who is out there uh, to guarantee you, right? So there is a guarantor. Like most of the time, the central government is and central treasury or central banks are usually the guarantor, and through that every intermediary flows, and then that reaches to the end consumer through the intermediary to the bank to intermediaries, and guaranteed by somebody like a central bank, basically do those transactions basically, right? And in country like India, we are still struggling with the inclusion. We are still struggling about reaching out to larger mass remittance plus. So that's what the uh, ecosystem or central financial ecosystem is basically. So there is somebody which is guaranteeing you. There is some sovereign nation is also guaranteeing or assuring you that your money is safe, and because if there's something going to happen, there's somebody is out there to take care of. So how does the DeFi is different from this, and how does that assurance and those guarantee comes in decentralized finance world?
Yeah. So I think you mentioned two major thing. One is the guarantee. I will come into that. And the second thing, it's very important for the decentralized world is limited access. And being did economics in India, and I have some development work earlier done. We know like people are unbanked in India, and we know technology can be useful in bringing those people to a banking world. So in the DeFi world, um, in the blockchain world, there is essentially a very small cost to get on board you onto the financial services. You just need a wallet. It's like it's something like what you say, the something like wallet Paytm, but 100x of that, secure as well, unique as well, built on a very small front ends, which we call them. Everything runs in a very secure way. So that's the limited access part, which actually um, is very visible, like is very visible. Many parts of the world, if you say, especially the developing worlds, if you see the Latin American countries, other countries, they are very much pro crypto. Even in the African countries, if you see this wave coming up, now and the other part, which is very, what do you say, controversial as well, and very people are still thinking about it, the centralized world or a guarantor. So the thing of guarantor, it begins like there is a sovereign guarantor. We understand what we, the DeFi world, or personally me, what I think of it as, we don't need to exclude the central banks, we don't need to exclude the banks. If we see, like in the now in the West world, in the US, the banks are actually building this system for themselves. This is what the institutional people are building it for themselves. They are, because they themselves recognize this is a very inefficient system. For example, lending and borrowing, you have so much intermediary work. You go to a bank, you go to a loan, there is a paperwork, there's an intermediary, there is another person, bank.
Yeah.
And if you talk to, because I have worked in a bank, and if you talk to a person, a big bank, they say like, oh, if you can give me some technology, if I can remove all these things, they were so happy about it. So it's something like, um, they are adopting it. So and
So let's try to unpeel the technology which is and why, what was the trigger which was really leading to the DeFi revolution, right? So in blockchain infrastructure, so what really makes somebody to think about you can build uh, some application of finance, and we'll certainly go for the other areas of finance which until now people probably, I had that impression that there is something which will happen on blockchain, but now people are taking everything on the blockchain from a financial perspective. But let's try to understand the basic fundamental trigger that could have led people thinking about using blockchain for building the financial things.
so so the basic thing how it started is, again, the nativity of blockchain. Like, the nativity of blockchain is that it is efficient, it is transparent. So if I'm going to lend you money, I'm going to know that it is it with you. I can even track that money because it's on the public ledger. So this is about the actual money. But when you talk about the DeFi, we are into the worlds of smart contracts. So imagine you have a piece of contract written between me and you, but that's I can, and that contract is very transparent. Other person can see it, I can see it, you can see it. If the violation, I can, it's a piece of a code in which if a violation occurs, the thing's gonna trigger automatically. You can't stop that trigger point. I have lent you a money, 100 rupees, and if you're not gonna pay me back, automatically your guarantee 100 rupees are gonna come to my account, right? So you think about those things, all the collection things and credit card, all those agencies. It's the contract is so much enforceable, it's so much efficient. So that is built on the blockchain, and that is what it is different.
The smart contract, then probably Ethereum, the credit goes to Ethereum for building that, right? So this, and that's what the question, somebody asked this question, ki why you need blockchain technology, because it allowed you to write that smart contract which is now, which is visible, anybody can verify it, and it's very transparent basically, and that makes every other evaluation possible basically. So now, but then there are challenges, right? I mean, in terms of how much you can do, how many transactions that you can do per second, basically. So how those challenges, because that remain as one of the key hurdle in last 4 or 5 years, and probably last 2 years, there are solutions like coming, like Polygon is also trying to solve that problem. So what had really gone in terms of really solving those key scalability challenges that Ethereum that we all get into when you talk about Ethereum's ability to do those transactions.
Yeah, and yeah, you actually you touched upon the question which has been a crux of DeFi, and which has been a crux of financial transaction cost, because it all so first, as the new technology evolves, like you need to build it first, so people were less careful about the transaction cost. Then suddenly, when the things were getting built on Ethereum, then there was a bottleneck of gas cost. Gas cost is a transaction cost. If
Yeah.
I want to have a contract enforced, you need to have a transaction cost, and that gas cost was really high. At one point of time, it was as high, more higher than the value of a contract. If a contract is of x amount, it was like 10x. So it is completely, like, irrational to do banking on Ethereum. So then there is an innovation, and I think then what's Polygon came in. um, so it has a very, very negligible small transaction cost, and that is a game changer. That is a game changer in the sense, um, you can transact thousands and thousands of transactions in a second, and then the transaction speed matters, and also the transaction cost matters. And we have been seeing everything moving from native Ethereum blockchain to other blockchain like Polygon. And that's why you see our ecosystem, like it has, people have been so happy with it. People have been so um, uh, inclusive in building those ecosystem, that, and one of the primary reason, it is the gas cost. There are other reasons as well. It's not like
Yeah.
Polygon is all about gas cost. There is other reasons as well, but this is one of the reason which just give Polygon a different edge towards DeFi world.
But let's little bit dwell on Polygon's ecosystem enabling DeFi. I think there are 50 plus application now you are supporting, right, in DeFi space basically. So help me understand what is that ecosystem component basically, and how they are supporting different types of application in DeFi space.
Yeah. So Polygon has Polygon has a very strong team, DeFi team built in. So let me give you a very brief, like, a team structure, how we see things in DeFi world. So we know Polygon is a blockchain, but it is, we have a special department and people who actually take care of DeFi world. It is something very intensive in nature and something very structured. And how does Polygon build it? So Polygon believes that every bank, every DeFi native protocols should be built on the Polygon. So we have purposely reach out to people like lending and borrowing exchanges, decentralized exchanges, options protocol, and KYC, Oracle, everything. So we try to help them to come to our system, and also help them building and synergizing them. So we create a platform. It's a technological platform. We of course do
Mhm.
an end to end help, and I help them to build them the research protocols, help them in their own research, like how to do that, and also help them to talk to each other. Like that's what it is, the collaboration is all about, and that's what it is slightly different, the Polygon ecosystem. So we actually believe, like, if we bring 2 or 3 people together, who are, we can build a much more better products, and that's how we do it. um, and we have a very inclusive system. Like we have layer 1 protocols, layer 2 protocols, like we have natives protocols. For example, lending and borrowing, we have ARV, compound. Then again, in the DEX world, we have Uniswap. And then above, and, and in the top of that, we try to build a level 2 kind of a protocol in the DeFi world, which uses these systems to build their own thing. Like for example, you can build an asset management system over these. So this is how, like, it's a kind of a, think of it as a, like a kind of a nice pyramid structure. We are trying to create an
Yeah.
ecosystem, and at every stage we help each other, help them.
Yeah. So means at a pyramid top, so there could be a digital application somebody want to do, and under that, then there could be, like you talked about AI1 little bit compound. So little bit you can talk about what AI1 compound does basically. So they are liquidity protocol basically, which helps you to do the deposit and lending operation, and they they in turns execute those transactions using Polygon blockchain, right? So is this understanding right?
Absolutely, a very close understanding. So yeah, exactly. So lending protocol, essentially what it does, you, if you have a pool of a cryptocurrency or even USD. You can convert that into the cryptocurrency, and that cryptocurrency is essentially lying like if you are not, if you are kind of a passive investor, like, and you want your money to earn some yield, like an Indian rupee, you want something to earn yield, you deposit in a bank, you earn some fixed saving rate. So these are the protocols. So what you do, you deposit your cryptocurrency in this protocol, provide the liquidity, and then you earn some interest, and like annualized interest rate. There are different um, what do you say, formulas and different interest rate which you can themselves see. They are very transparent, like nothing is nothing is shady about it. And then once you deposit this, think of this, you go to one bank, you deposit your money, there is someone who can borrow also. So there
Yeah.
is a there is another part of a market in which people borrow ETH. This in people all borrow USDC, dollar backed stable coin. So, and they also pay interest. So this is an ecosystem which is managed, and all this is run on the blockchain. And there are another important thing actually which I missed, and which I should have told, like decentralized autonomous organization. If you
Yeah.
see DAO, those are the core, that's the core invention of the DeFi world.
Yeah.
The
Yeah.
world of DAO is very intricate. World of DAO is very democratic, and the people if you if you are if you walk through the DAO processes, the voting mechanism, it
Yeah,
works so
so I
smoothly.
think this is interesting point you brought it basically. So in a our plane that we are into, right? There's a regulators, right? And the regulatory policies and the regulators, and there is a committee maybe, but at the end of the day, there's a central regulator. But DAO is the mechanism which really decentralize the decision making as well here, right? So I think you could explain on, for example, how DAO can be leveraged to take those decisions and also improve the governance of a financial ecosystem that is being built on these decentralized platforms.
Of course, of course. So I am a big fan of DAO. So DAO system is a system. It works just like democracy. It
Yeah,
works with
yeah.
all of these nuances, all
But
of this little bit
democracy,
happening.
you usually go through a lot of that gridlocks, right? So, and it's very difficult to
Exactly,
take a
exactly.
decision. But how the DAO makes it possible the decision making in decentralized world?
Yeah.
So that's the interesting thing about technology that we are talking here, right? So if you want to make a decision making more decentralized,
Mm-hmm.
and you have the conventional means basically, so then it will be taking a lot of time. One is it will take a lot of time, and secondly it will also be leading to a lot of gridlocks as well. So
Yeah.
how does the technology enables decentralized decision making? Can you just dwell a little bit on this?
Yeah, sure, sure, sure. So, so how the DAO system works is like you have a proposal. Suppose I am a holder, I am a stakeholder in one decentralized protocol, for example, Compound or Aave. Then I I would own some voting rights. My voting rights would be dependent on my participation. Like this is how I'm intensively participated. And then suppose I want to change something. I think that interest rate curves are too low. I want to increase it from 3% to 4% for one of the crypto coin. I'm going to submit a proposal. There is a centralized system. I'm going to submit a proposal like we do submit a proposal in a legislative assembly, a Lok
Yeah,
Sabha.
yeah,
I'm going
yeah,
to do that.
yeah.
I'm just a small token holder. I'm going to gain a lot of confidence of others. There is a live blog, a nice interactive thing a DAO manages. It's just like a blog with comment capabilities, voting uptake, and you can just write, this is my point of view. You can tag others, you can call in others, like please, this is what I think, and then other people you might convince them. And then there is a voting day, like voting happens on this on a particular day. And then if the votes are in your favor, if whole of the system votes on then proposal, then your proposal wins. This
Okay.
is like it works smoothly. Like if you see any big uh, it
It's,
a small proposal and large proposal, all of them are taken as the same way. Nothing like in DAO is insignificant. And
yeah,
in
yeah.
fact,
Yes, you
I,
you talk about couple of concept, right? The and staking and yield, right? So there is a yield
Mhm.
farming and staking as well. Can you help us? Me, how what are they different than what we do interest rate, saving interest rates, or those kind of interest rate that we do, or the returns that we get? So how different those concepts are? Are they same that we see in our world today?
Yeah. So it is slightly different. The fundamental concept is same. Like if you have idle capital, you can deposit it some to someone who has a better use of it, like a
Yeah,
example bank, because
yeah,
bank can distribute it to some corporate.
yeah, yeah,
In the crypto world, the things are much more efficient. For example, if you have if you have a capital, you can deposit it to a protocol which can which can lend it to other protocols. So this is called a yield farming. Like they itself can manage your money in certain way that it distributes to highest return giver. Okay,
yeah.
so that's kind of extracting the yield
Currently,
from
the
it.
rate of yield API could be quite significant in some of the cases, basically. But sometimes what scares me is the kind of rate that you talk about in staking or yield farming. uh, then the concept of the inflation also do come into picture, right? In our current world, we always talk about the inflation and inflationary pressure, basically, in how the central agencies manages inflation expectation with the interest rate manipulation, basically, or intervention,
Hmm.
basically. How does inflation and those kind of liquidity, money flow, cash flow,
Hmm.
does get basically managed in the decentralized finance?
Yeah, so we so in the decentralized finance, we do have a very similar structure that a bank and a central bank manages. We have a proper treasury. In decentralized finance, there is a money market funds as well. In decentralized finance, we do have a reserve fund as well. If things go wrong, for example, in MakerDAO, they to begin with, after some time they started like there is too much volatility in ether, so let's create, when people deposit money, let's deposit 5% of the money in the reserve fund for the
Yeah,
the bad times.
yeah,
And
yeah,
that has been a absolutely perfectly fine strategy. You see how central bank functions, how bank functions, like how
yeah,
big banks,
yeah,
they do have this reserve funds. So
yeah,
that's how it works. Actually, it's quite similar, but it's much more efficient because you can see the reserve fund with your eyes, like this
yeah,
is
yeah,
the money, nobody's
yeah,
gonna take that fund.
yeah,
and
yeah.
uh, and
Mm,
one of the reason I think it works, people trust this more, because if you see the small banks, there has been incident which the funds which was supposed to be the reserve fund, when the money was running out, that was not found. Somebody stole it. It can't happen in DeFi unless there is a security risk, and which tech world and tech people take it super seriously. Things have been going really really fast in
yeah,
that
yeah.
domain.
Wait, help me understand me. All this is happening in the entire another world, or there is a ways to bring the legacy finance into this as well. You talked about some of the banks have been also now experimenting with that. So would we see more bridges that is being built between the centralized finance and decentralized finance in the coming future?
Of course, of course. If you see the big banks in US, and big banks in Europe, especially in Switzerland, they have built up an institutional team of lending and borrowing.
Mhm.
To begin with, one of the biggest example is central bank digital coin. It is something like a stable coin built on a central banks.
Yeah, yeah,
Similar kind of frameworks. So we have been seeing, and one of the biggest example of banks dealing with the cryptocurrency world is payments. Like
yeah,
now,
yeah,
people have started moving their payments to the blockchain. Like for example, one of the biggest, Visa, like they literally have, you will be seeing the blockchain enabled payments now. They are much more faster, zero fraud rate.
yeah, yeah. So that's what, because at the end of the day we have significant community joining here from security and privacy. I wanted to come to that. So one is security, other is the privacy, because everything is transparent. Then would that not compromise the privacy of individual, because every other transactions is now transparent? That's the second question. One is security, other is privacy. And if there is a fraud happens, so there's entire law enforcement bodies that work right here in our world, basically. So how does investigation happens there? How does punitive measures that are being basically exercised there in the decentralized finance?
uh, so there are two parts of it. One is the inherent security, which is very very strong, the
Yeah,
blockchain. Like
because it's
generally, to
enabled by crypto. Yeah, yeah,
exactly. So to begin with, there are, so when people say like there is theft happening and all, if you look at the overall data in the crypto world, the thefts are happening at much 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 lower rate. That is the
yeah,
data speaking. The inherent crypto. Yeah. The second thing, how it is getting managed, then I would really like to give an example of, like, 3 billion theft which Duo was trying to do on Bitfinex. And there are actually law enforcement agencies in US like FBI actually set up a team which monitors and take care of these kind of financial crimes in a larger way. So we have seen a lot of investigation and law enforcement part of a team, in which actually the crypto exchanges, the decentralized exchanges, and other people team up, because we also want safer world for everyone. It's not like that we don't want money laundering to happen. We like, that's why, like, people, things have been going into the very positive direction, I would say. So law enforcement agencies are also setting up these kind of frameworks like they set up in like financial fraud. So
No. Yeah, this is quite interesting. I think in short span we try to explore the various different things that are now being practiced and how this infrastructure is building. And I believe from now, this is last question, Amit, to conclude the discussions. From now to next 4 5 years, how do you see this entire, because DeFi at this point of time is almost 100 plus billion plus kind of a value which is captured there basically. So how do you see from now to next 4 5 years the entire DeFi ecosystem will be evolving?
one of the thing I would not speculate of this long time is that things move very fast.
Yeah,
First of all, in DeFi world, because it's a technology world, we have seen Web 2, how fast
yeah,
it moved. Um, Certain things I can discuss without the timeline is the institutional adoption, because you also
yeah,
touched upon it. Because
yeah,
now, it was earlier a very retail driven, individual
yeah.
driven. Now
Mm,
institutional people are coming into it, and they are
mm.
coming with a very serious way. It's not like they are just coming it for,
Not
like, for
instrumenting,
few
yeah,
years.
yeah,
Yeah. And the second thing I want to think about, tell about, is much more inclusiveness. Much more inclusiveness, and you'll see more countries and more people coming to this
yeah,
in all parts of the world. So
mm,
that's what in the, and all of this will lead to an higher capitalization in this decentralized finance,
yeah,
because it's obvious there's a volume,
yeah,
big or small. So that's what my it's so people say, um, like, the people who are visionaries, like, decentralized finance is future of finance. And
yeah,
I believe in that, and that might be, we will see that probably in your timeline which you just said, a
yeah.
smaller.
Yeah. And with this, thank you, Amit, for joining us today. And wonderful to hear you and know about the work that you have been doing. And also quite inspired to see the work that Polygon is also trying to do. And we see Polygon emerging as one of the key player enabling all of this transformation. All the best wishes for Polygon from DS and the community that we usually manage from DSCI. So thank you for joining us today, and we will keep talking to you and Polygon team quite often from now because we want to take this on our agenda. Thank you for joining us today.
Thank you for inviting me, and thank you for all the people who are listening. Polygon is building an ecosystem, and would be happy to bring as many people on board on our ecosystem. Thank you so much.
Thank you.